As the saying goes, once bitten, twice shy. But that is not the case for private healthcare operator Ramsay Sime Darby Healthcare. Despite the collapse in the previous JV talk, the company isn't shying away from China. I talked to Group CEO Bronte Kumm about opportunities in the country's booming private healthcare space. Bronte, thank you so much for joining me in this episode of Talking Age. Now, Bronte, let's talk about China, the market where foreigners, foreign players would like to enter, given the reform in the healthcare sector. Now, this is your second attempt to go into China after a botched talk with Jinxin, and you are spending about $500 million US. Now, my first question to you would be: do you have sufficient liquidity at Ramsay Sime Darby to enter into China, or would you be needing capital injection from your parents, or ultimately debt?
The total of the deals of 500 million US. As to what part of that we decide to take in our role, but the total is 500 million. And they're in two separate hospital groups. We can raise, without going to the shareholders, in the vicinity of 1.5 to 2 billion RM.
Right.
So yes, we could accommodate those hospitals without going to the shareholders.
Okay, now going to China, some people would say once bitten, twice shy, but then I think you haven't shied away from China. Why do you see China as a potential for Ramsay Sime Darby?
Yes, it's once bitten, twice shy. Is that whilst it was unfortunate, and a protracted negotiation, you never stop learning, and we learned something for 3 years there. And as I keep saying, I think the hospital group, the Xinjiang Hospital Group, I saw as a very attractive, as an operator, a very attractive opportunity. We understood the business. The chairperson was a committed clinician. We spent a lot of time understanding the business and affecting cooperative change in the business. So we never stopped liking the business and spent a lot of time understanding the business. What didn't go so well was clearly we continue to learn about the regulatory environment in China. We continue to learn that whilst things seem to be moving for us, they're also moving very rapidly for the Chinese that we're doing the deal with. And circumstances and their shareholders can change them. So sometimes they have difficulty doing deals themselves. So we learnt that the next time we do it, there are certainly many regulatory boxes and things that we need to tick off. Because once we get into the operations, there is a transparency and clarity that we're comfortable with, because we are hospital operators. But we need to be more rigorous on the front end before engaging the deals. And the two deals we're speaking about in China at the moment, they've ticked all of those boxes, and we're entering them with a degree of confidence about the restructuring framework, the ownership, the motivation of the owners, and the intention. So whilst disappointing that we lost an opportunity, the opportunity to learn has been a benefit to us.
Is there really sensible valuations for hospital assets in China at the moment?
Yes, the multiples are more along the lines that we would expect in Australia. The multiples are more in line with what we understand. We do appreciate, though, at times, people are very quick to go to market, and the Chinese market can at times generate extremely high multiples that colours the rest. But our initial indications are that, whilst always subject to due diligence, the multiples being offered in the hospitals are within the tolerances that we understood from Australia. Whether the value's there, well, that's, as I say, subject to due diligence. There are segments of the healthcare market. We know diagnostics and pharmaceuticals and supplies and capital equipment are always going to trade at a multiple that's different. as compared to hospitals. And I think when people talk about the health, they tend to bundle them all together and talk about the high multiples. In fact, there hasn't been a lot of trading of hospital assets as such to determine what is a right or a wrong multiple. The fact is, in China, you're just going to have to work asset by asset and be guided by largely your partners, whether that's a bank or a PE firm, and also market intelligence. But we tend to, where we can, ignore the market multiples and just concentrate on the individual assets.
Right, I see. Now, will the deal be something like along the lines of 80-20, where you mop up 80% stake and 20% are left with the local partners, or 70-30, or 50-50 joint ventures?
And from our point of view, if we continue to think that, like that, that means we can enter any number of deals for varying percentages, at times less than 50%, because we are operators. And in China, the market's enormous. The assets we're talking about produce large amounts of activity and revenue. And so in China, as long as we can have operational governance, and that is targeted executive placements, we're prepared to take varying amounts of capital interest. We'll never be a passive investor. But we, at times, may have to take a minority stake, really less than 40%. We may have to take a minority stake. I think everyone's preference is to be the majority shareholder. But as I say, your entry points into China need to be cautious and have a local partner, and sometimes have a banking partner as well.
Right. Okay. Now, talking about the probability of success, how confident are you that the second attempt will prove to be successful for Ramsay Sime Darby?
I'm not. I think that we're better prepared, and we've arranged the circumstances as best we can to prepare for not spending months and years preparing without failing. But at any time, there are changes that can change the complexion of the discussions very, very quickly. The circumstances, and whilst we've learned something our first time in China, I don't think any of us know it well enough to be able to say with any certainty we complete. But we are definitely far more confident now than we were 3 years ago.
It looks like Ramsay Sime Darby Healthcare has big plans for China, but whether it will succeed in its second attempt remains to be seen.